We've talked about the president's warning to Apple, essentially. Well, Apple's fired back with sort of a warning of its own, saying that the proposed tariffs on Chinese goods will end up raising prices for some of its products. Let's bring in JPMorgan Chase, Chief Economist Anthony Chan, and also Deirdre Bolton from Fox Business. Hello to both of you. Good to see you, Anthony, after a long time. And Deirdre, good to see you.
Good to see me since, last week.
After every day,
yeah.
Right. I guess one of the ways of phrasing the question is, how much would you be willing to pay for an iPhone if it was made in the USA? Because most people agree that no matter what the president says here, they would cost more.
Well, I was thinking there's going to be a luxury premium, even more so than there is already if this happens. But one thing I want to be clear about is that Apple itself, and I have this list ready to go, has actually not commented on iPhone prices. I know the president did. Apple has only said, and I'm not saying this is only, but new China tariffs would boost prices on some products. So they're talking about the watch, headphones, those little AirPods, the Mini Mac desktop, chargers, adapters, the Apple Pencil stylus, iPad. So it's almost like they're trying to maybe put it in products that aren't the headline product. As we know, Apple gets more than half of its revenue from iPhones. And then just as far as press goes, this is probably not the right week that Apple wanted all this to come out, because their big event is the 12th, right?
Yes.
It's Wednesday.
The big event.
The big unveil. They're supposed to unveil a bunch of new products, including up to 4 new kinds of phones.
So the economic kind of discussion on all of this, Anthony, is that the president wants, he says, to get to this world where we're living in a zero tariff universe. That doesn't necessarily mean, though, that products made in a zero tariff universe are suddenly going to cost the same if they're made in China as if they're made in the United States or some other country.
No, of course not, because there are transportation costs, there are differentials in labor costs. There are many variables that go into the cost other than just a tariff. But the reality is that most economists will tell you if we go to a no tariff world, that's a win-win for everyone else.
Right.
And we certainly are, in fact, trying to negotiate with Europe, trying to negotiate with Mexico and Canada to at least get closer to that. But no economist will quibble with the notion that a zero tariff world is a lot better.
Yeah, if that's the goal,
that is the goal. I think it's been made very clear by Washington that that is the goal.
But what about incentives and the idea that sometimes we talk about other industries where you are incentivized? I remember we did the washing machine story a few months back, and some other stories, to make products here in the U.S. versus overseas. Is that true in technology with all the component parts? Is there ever an incentive for a technology company to actually make products, generally speaking, here in the United States?
Well, I think the biggest incentive for all companies to make products here was the recent cut in corporate taxes.
Right.
If that's not an incentive, I don't know what is. So certainly that has encouraged a lot of companies moving either their operations to the United States, or certainly making them less apt to move their productions overseas, because right now it's economically feasible to produce in the United States. Now, the only constraint is that the unemployment rate is so low at 3.9% that there is a limit as to how much we can increase production.
Yeah.
But if you increase productivity, have more capital equipment and expenditures, more all those kind of expenditures, and raise productivity, we'll make progress even on that front.
Well, to that point, Deirdre, we talked a little bit about this last hour, is that everybody talks about, just Apple specifically, that the advantage of making phones or anything else in China is lower labor costs, which obviously is part of it. But Tim Cook has actually pointed out that the Chinese workforce, and there's so many workers, there's so much of everything in China, but just so many people there with the right skill set that Apple needs, that they actually move into China for other reasons other than lower labor costs. They have the right skills in many cases.
They have the right skills, although a lot of this is manufacturing, and we looked overnight, right, at the Asia market reaction was like a lot of these suppliers to Apple were the ones who were hurt. And Tim Cook, not surprisingly, not afraid to weigh in on bigger picture economic matters, saying that these tariffs would be tedious. I don't want to misquote him here, but he says, our concern is that the U.S. would be the hardest hit, result in lower U.S. growth. So, I mean, he's willing to swing for the economic fences, right? And competitiveness, and then higher prices, of course, for U.S. consumers. So he, as a business owner, is willing to say, of course, altruistically, it's not just going to hurt my company, it's going to hurt the economy. But it sounds like you disagree, right?
Well, if you have tariffs, I think the International Monetary Fund, the IMF, they all say that if you have a tariff war, you have tariffs increasing, global economic growth slows down, and the U.S. is part of that. But again, Connell, the goal is to move to a situation where tariffs are lower rather than higher, and economic growth picks up.
A while, though, don't you think, to be fair, Anthony, to people watching, to get to that point, especially with China?
There is no doubt it's taken a while with other countries.
Is it years?
Right now, the president has made it very clear he wants to wait maybe a little while, maybe after the midterm elections to negotiate. But I have no doubt that the goal of all the countries, including the U.S., is to negotiate a mutually beneficial type of agreement.
But do you have any doubt that we'll actually get there?
I have no doubt that we'll move closer to a situation where tariffs are lower. Do I believe that tariffs are going to go to zero? That's a little bit more far-fetched. But guess what? If we move closer towards a lower tariff world, it is a win-win.
Well, that seems to be, Deirdre, what the market is kind of anticipating or counting on almost, is that even today we don't see much movement, is that people, to Anthony's point, are thinking, you know what, this will get figured out. You know, at some point it will get figured out. For all the noise and all the back and forth and screaming and yelling.
I think your question was the right one, is when, right? When and in what form, right? And how long does it take? And to your point about labor costs, I mean, that was the whole argument with against NAFTA and the auto dealers, particularly because President Trump was saying, well, in Mexico, you know, you can have cheaper labor. So that is part of the balance. I mean, I think some of this is tariffs, but some of it is also IP, and that seems to affect the tech community more than others.
Yeah, and the question about what we're all going through right now is all of this going to be worth it? We have a strong economy that's going, you know, things are going well, right, on the job front. The economic growth numbers have been strong. Is this trade war that we're sort of engaging in, at whatever level we're engaging in it, going to be worth it? Are we going to be better off, or will we have wiped out some of the effects, say, of the tax cut that went into effect?
Well, right now, Connell, with the economy doing so well, it doesn't appear that the U.S. has suffered very much. And in fact,
so this is, if you're going to have a trade war, this is the time. Is that
consumer confidence is at very high levels. Business confidence is at high levels. Unemployment insurance claims are at the lowest level in 49 years. This is the time when the U.S. economy is at one of the strongest points that we've seen in a long time.
We're not putting that at risk.
I think that at this juncture, the third quarter numbers are coming out. We're probably going to see a 4% plus number in the third quarter, very strong, following on a similar number in the second quarter. I think that right now the economy is in a sweet spot.
Good to see you again, Anthony.
Pleasure.
And always good to see you, Deirdre.